From policy twists across the sea to steady growth in our economy, discover why Malaysia stands strong in 2026 uncertainty. Hello everyone, I'm William, an Equity Portfolio Manager with Manulife Investment Management Malaysia, and this is your Malaysia Market Outlook for the first quarter of 2026. The fourth quarter of 2025 began with the US entering its longest ever government shutdown on October 1st, lasting 43 days as Congress failed to agree on federal budget allocation. While markets remained broadly stable, sentiment softened as key data releases were delayed and concerns grew over policy continuity. The shutdown was ultimately resolved in mid-November. Trade tensions briefly resurfaced after President Trump said he would impose 100% tariff and additional export controls on China in response to Beijing's new port fees and rare earth restriction. Sentiment improved shortly after when President Trump and President Xi agreed to one-year truce, effectively pausing further escalation. The US Federal Reserve maintained an accommodative stance, making two 25 basis point cuts to Fed fund rate to a range of 3.5% to 3.75%. The Fed also announced it will conclude its quantitative tightening program on December 1st, improving liquidity conditions. In turn, the US Treasury curve steepened. Short-term yield fell on expectation of further easing, while long-term yield edged higher amid persistent inflation pressures and widening fiscal deficit. Meanwhile, global equity delivered positive return, with emerging markets outperforming on the back of weaker US dollar and improving capital flow. In Asia, AI and semiconductor momentum supported strong gain in tech-heavy index, with South Korea KOSPI and Taiwan TWSE both posting double-digit growth. The MSCI Asia ex-Japan index also advanced solidly, driven by broad strengthening across North Asia. Back home, Malaysia's economy remained resilient. GDP expanded 5.2% year-on-year in the third quarter, supported by firm domestic demand and stronger net exports. Fiscal policy was reinforced through the tabling of Budget 2026, which emphasized continued fiscal consolidation alongside stricter enforcement and monitoring of tax and revenue collection. At the same time, inflation remained subdued at below 1.5% throughout the quarter, reflecting stable cost conditions and healthy balance between supply and demand. Throughout the fourth quarter of 2025, Bank Negara Malaysia kept interest rate unchanged, noting that the current policy stance remained appropriate given steady growth and mild inflation. In currency market, the Malaysian ringgit was the strongest performer in 2025, appreciating 10.1% against the US dollar, supported by favorable US-Malaysia differential, improving clarity in global trade conditions, and rising investor confidence in Malaysia's macroeconomic policy framework. Looking ahead, we expect volatility to persist into early 2026 as markets assess potential shift in US fiscal and trade policy, alongside uncertainty in global growth trajectory. Despite this backdrop, we maintain an optimistic view on the Malaysia equity market. Domestic demand remains resilient, investment activity continues to strengthen, and foreign interest has been gradually rebuilding amid a supportive valuation environment. These factors position Malaysia favorably relative to regional peers as global risk appetite stabilizes. From a policy perspective, we expect Bank Negara Malaysia to keep the OPR unchanged in early 2026, supported by healthy economic growth and benign inflation outlook. Beyond this period, policy adjustments are likely to remain data dependent. Our medium-term outlook for the Malaysia bond market remains neutral, with solid fiscal management, controlled issuance, and stable government policy providing firm support for the domestic fixed income landscape. Thank you for tuning into Malaysia Market Outlook. Stay informed and stay tuned for more.